right, we got some time left for bulls to squeeze out even more of the juice from this market, which is up big right now. Let's bring in our Schwab team. Nate Peterson's Director of Derivatives Analysis and Cooper Howard's Director and Fixed Income Strategist. Hey, bonds are selling off, but for once it doesn't seem to be dictating the entire market. Where is this equity confidence coming from, Nate?
Hey, afternoon, Oliver. Yeah, if you look at Friday and the behavior of basically gold being up as it was, bond buying taking effect, the VIX up. The VIX had its biggest pop basically since March on Friday. I think there just was a lot of that risk-off mode heading into the weekend, and then the only way that I can interpret higher yields and a higher equity market like we have today, coupled with a VIX that is down 9%, I think the most logical conclusion is that, relatively speaking, there wasn't as much escalation as it feared. Of course, it's a tragedy what's going on over there, but I guess in terms of the market's interpretation of it, I guess that there is some relief buying here. You throw in bullish seasonality and then optimism over Q3 earnings, which are really going to be getting a lot of big names this week, including Netflix and Tesla, and that's the most logical explanation for why we're up over 1% across the board.
Yeah, Russell leading the way, the small caps making a big comeback. Well, what about the world of bonds, Cooper? Have we seen the Treasury market now through a week of geopolitical risk, inflation data? What's the clear takeaway here? Because it's a bit of a push and a pull.
I think that there is no clear takeaway in this market. I think that we're going to continue to see volatility in the Treasury market. And there are a lot of things going on, Oliver. There is the geopolitical aspect of it. We've got the term premium that's moving higher. That's kind of this weird thing in the fixed income market that we oftentimes talk about. That's the compensation for rolling over short-term yields. But it's really just a capture all for just a lot of the unknowns that are going on in the fixed income. So I think that there are a lot of events, and one of our premises is, at least in the near term, we should continue to see a little bit more volatility.
Okay. So we might not be totally done yet with the bond bears.
I wouldn't say that we're totally done with the bond bears yet, but I do think that we might have some room for increase or decrease in the Treasury market. So I think if we look at Fed policy is another unknown. We're going to hear from a lot of Fed speakers this week. I think that the storyline, kind of the narrative that they're going to preach, is that they are going to be continuing to hold for an extended period of time. I don't think the important thing to look at is necessarily another rate hike. I think the odds of a rate hike are relatively low for this cycle, but more important is going to be the story of how long do they continue to hold at these elevated levels, and then what is going to change the picture as far as if we do get another rate hike later down the road. Maybe inflation reaccelerates. What are they going to do under that scenario? What happens if growth continues to look good and we get into the kind of the soft landing narrative? What do they do under that narrative? So I think that that's going to be a very important factor for what happens with the fixed income market.
Okay. Do you think, Nate, that stocks holding on to the ranges of the past several months, NASDAQ holding summer lows, some of these tech companies actually grinding out 52-week highs, a couple examples of them in the big cap world, how much of that reflects comfort with that higher for longer regime? Do you think that is playing a role here, or are we rallying despite that?
Well, it feels like the seasonality and the optimism, coupled with the technicals, that that nice bounce off the 200 SMA in terms of the S&P 500, putting that all together is just, at least for the near term, is giving enough of an excuse to push us higher here in the near term. But yeah, higher for longer is going to be kind of the question mark around corporate earnings and earnings growth and what kind of impact that potentially has. Even if we, estimate that the impact of a rate hike still takes, I don't know, I've heard estimates anywhere from 6 months to 18 months. Well, we got our last one in July, so I don't even know if we're fully baked in terms of, what the Fed has done, how that's going to impact the economy. We're going to get GDP next week. The estimates are on the consensus side, between 1.5% and 4%. It looks like the economy's resilient. It's hanging in there. But what that might also mean is that inflation may be a little bit more sticky. So the CPI report on Thursday was not great. I'm looking at a lot of these strikes that continue to kind of hit the headlines here, and I feel like the more successful some of these unions are in getting those higher wages, that there's almost a ripple effect, and you get other industries that begin to also demand higher wages. That's what the Fed doesn't want to see. So we'll have to wait and see in terms of what the Fed's done and how long they do it, and whether we can get the earnings growth to help justify another push higher in equities.
That's where this coming week has to live up, to the expectations with earnings coming out. As far as Fed speaking, Jerome Powell, anything, Cooper, any strong feelings about whether or not he's going to, give us anything other than what has been seemingly a very choreographed Fed, speak over the past week across everybody? It feels like everybody's saying the same thing.
Yeah, I'd really be surprised if he tries to go outside of the narrative and gives us something kind of a shock to the market, if you will. I think that one thing that you have seen from Powell in the past is he has tried to really kind of preach the same message as many of the other Fed members, and they've kind of tried to say the same thing along the way and not really surprise the market. I think you can point to points to where he might not have done the best job of that, and that's no surprise, but I think that he won't give us anything that's going to be a big shock this week.
Okay. Yeah, it seems like they've all pretty well laid out the language that they're going to use. I mean, it's like word for word, and they kind of go through spurts where like all the Fed speakers sound the exact same, and there's moments where they all sound very different. And right now, it sounds like they're all the same. Even hawkish Kashkari has dialed back his hawkish language the last couple of weeks. So appreciate the conversation.
Of course.
Cooper Howard, Nate Peterson. All right, we got jump bells just rang.